Donald Trump says he deserves a pass on the first quarter GDP reading, but recession risk in the US is starting to look very real.
It is indeed. I think the way that he's got his pass is the fact that he's pretty much put all of it on his predecessor in terms of the issues that are now facing. But you've got to remember he has been pretty much in power for all of the first quarter of this calendar year. If you look at when the slowdowns that in the data that mattered happened, it was in February and March. So I don't think the pass mark is a fair estimate. He has clearly been part of the reason it's there. And if you go back to year 10 economics, don't forget GDP is consumption plus private investment plus government spending plus and minus imports, exports. So if you look at it, it's the consumption side. If you look at the consumer confidence, the consumer numbers and the consumer overall inputs into that GDP figure, that is a real concern, not just for what we saw in the first quarter, but now the second quarter as well. And therefore that possibility, as you alluded to, around recession is growing because clearly already the consumer in the US looks like it's on some form of tariff strike.
And those tariffs didn't take effect until the 2nd of April, despite them being on pause now.
Yeah, and I think that's the interesting thing is that we knew they were coming. I mean, in the first quarter, the tariffs that we did have were against Canada, Mexico, steel and aluminium. And so we didn't have the as you alluded to there, the Liberation Day tariffs or reciprocal right tariffs that are currently now creating all forms of other havoc. So the reactions had already started. You had seen the movements in the consumer already start before Liberation Day happened. And that is why it spells quite concerning news for the outlook around a US-led recession, because the consumer now has had almost 3.5 months to digest the first round and now also the second round.
We're seeing strong earnings growth still priced into shares, though, at a time when companies are removing their guidance on uncertainty this earnings season.
And I think that's the answer as well. The question is the answer. The numbers that we are getting as from the first quarter, we are getting also flow through from the back end of 2024, the euphoric period that was going on around a second Trump presidency, that it would be a bit more like the first. The reality now is there, and it's in the forward-looking earnings. I think that's the more telling thing. And those firms that have told you they cannot, not that they can't, that they cannot give guidance because of how uncertain the future is, have been savaged, yes, but are also telling the truth. They are very clear in the fact that the outlook for their product, for their service, or whatever it is that they offer, they cannot guide because at the moment they are now going through a scenario where their B2C, B2B, whatever it is that they do, is starting to see a strike. And again, the best way to look at this is we're not just seeing pause of orders into the US from places like China and the UK, we're actually seeing cancellations. And so how can you budget when you're having to cancel orders into your own country?
Curiously, though, the S&P is up 12% from the trough. The share market has bounced in recent weeks, but that hasn't been complemented by a rise in the US dollar or a sell down in bonds. In fact, yields have been falling.
Yeah, and I think it's the bond market you've got to look at. I mean, part of the rally that we've seen here is that the bond market in April acted as the guardrails on the presidency. Normally it's something like the Department of Justice or it's the Federal Reserve, but the fact that the markets, particularly bond vigilantes, started to really pressure US bonds and made government spending very, very expensive because the interest costs started to really rise. That's when we saw him back away from the current tariff scenario where we got the pause, we got the change, and that's what the equity market is on. It's on the pauses. It's on the prospect that the tariffs as a whole will be significantly less than what was originally put out there. But the bond market is telling you very clearly that that doesn't mean that a recession isn't going to happen. That doesn't mean that further chaos from the Oval Office isn't going to happen. And that's probably why the bond market is being prudent. The equity market is trying to go down the idea that it's going to be pressured, the administration that is, into acting in a more conservative view rather than the bombastic view it started with.
Yeah, so the idea that they'll reach a deal.
Yeah, that they'll reach a deal, that maybe the overall Liberation Day tariffs will be a blanket 10%, that the China tariffs will be halved. But even if they're halved, they're still 50 to 60%. And whatever way you look at it, a tariff is not collected until it's imported into a country. And the US at the moment has got a scenario where businesses are actually not importing because of the tariff current numbers that are making it impossible to do business. So yes, a deal's probably going to be done, but what happens in the interim, what's happening now with regards to the impact that it's having on forward progress, we will find that out in the second quarter, and that's what I think companies are trying to tell you right now.
Well, Donald Trump promised to bring energy prices down in his campaign, but fears about slowing growth might not have been the mechanism he was hoping to use.
Yeah, and I agree with that. I think also the market probably missed that point as well, Alicia, with regards to the idea that he was going to bring inflation down by drilling, by doing pro-business, very, very expansionary sort of numbers around that. You're right, it's been the opposite. He has put, handbrakes. Tariffs are handbrakes on the economy. They're also handbrakes on business as a whole. So lowering growth has certainly lowered energy because the transportation is slowing down, the movement of people is slowing down. He's also had a slight benefit in the fact that if you have a look at oil as a whole, it's moved lower because the movement of people in places like Asia has also slowed down because they don't have to transport as much goods.
Evan Lucas, thank you.
Thanks, Alicia.